Hello, it's good afternoon, everybody.
Oh, this is 8th.
This is 8th of March. So today's webinar we're just going to build on a given strategy. The one we've looked at this strategy sometimes back, but looks like most of us did not take it serious. Like some people kept asking me if I could expand on certain areas, which today I want us to look exactly at that. So this strategy I've said it is for 5 minutes time frame. But it's possible you could use it on any other time frame and still be very successful. So there are some few things that if you can look at in the market, then you will likely know exactly where you expect the price is headed. So the first thing is you have to know the direction, and at least you must have an idea of when the direction is ending. That is, when the price is going upwards, you need to have something which tells you that the price is now going upwards, and we expect this upwards to go at least up to this area, so that you know when to step out of a trade, so that you don't find yourself holding on to a trade way too longer than is necessary. So I want us to look at the zigzag indicator first of all. This is the first indicator which we have it here. I'm using the default settings. The default settings are the same for whichever broker or any platform. It's the depth is 20, deviation is 5, then back step is 3. This is how it looks. So I'll make the line a bit thick so that we are able to see entirely what's happening. I'll make it thick and dark. Now you can see it clearly. So look at this line and see what happens. Now the price was somewhere here. We pick this as the swing high. The price went down, it formed a low, then it formed a high lower than the previous high. It went down, came up, it formed a high which is now higher than the previous high, then it went down and formed a high which is lower than the previous high. Then the highs kept getting lower, and for the first time now the low is the high is likely going to be higher than this high here. So this is one way you can know that we are in a downtrend. That is, the highs keep getting lower, and at some point it breaks out of the previous high. This may mark a possible end to the previous downtrend. So this is one way you can recognize that the price is indeed ending the downtrend. Or if the price begins to form lows that are lower than the previous lows consecutively, then that means that the price is headed for a sell. Like here, we had a high, lower high, lower high, lower high, lower high, and a lower high, and for the first time the price has now gone above the previous high. This is not a sign that the price is entirely going back upwards, but it could mean that the price may start its journey to the upper side. Is that clear? So it's not, you may not necessarily say that the price is ending the current downtrend, but it could signal that the price may likely be reversing upward. So when you had a sell position and this happens, it is very good to actually step out of that position and wait for price to again start forming lower highs. Or if it now starts forming highs that are higher than the previous high, then that's a sign that we are now headed long. So now we've seen that this is how you can recognize a downtrend, the highs getting lower. The uptrend is opposite the downtrend. That is, look at this. This is still high, lower high, lower high, lower high, lower high, lower high, and a lower high. You can see that clearly that indeed we were downward. So it started here. It started somewhere here. So we have a downtrend, a downtrend, a downtrend. The price continues to go short. This is a clear indication that the price is continuing downwards. So we have, you can see this, 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 and you can see this. And then we have another one. This is, you can see a high, you can see low getting higher, you can see low getting higher. This is a good example for the uptrend. So there is something which you're supposed to add onto this, not just necessarily that when this happens you're supposed to be looking for buy, but there's another indicator which you should add on this one to help you judge exactly where to enter trades. and that indicator is the stochastic indicator. So the stochastic just helps you know areas that are overbought and areas that are oversold. So if the price, we are in an uptrend based on the zigzag indicator, and suddenly the price gets to oversold within an uptrend, that means it's a good opportunity to look for a buy. Let me show you. You have it here. This one also, we use the standard setting, the default settings. That is something like this. We have a very good uptrend. Then for some reasons, in between this uptrend, the price gets below the oversold. It gets to oversold, it gets to oversold, and it gets to oversold. Usually those are the best places to look for sell positions, the buy position, sorry. So you'll be starting to look for a buy in between these lines. Whenever the price is oversold and we are in an uptrend, then you look for a buy. Like here, you could have taken a buy. Then here, you could have taken a buy. Then here. So you could not have taken a buy here because we only buy when both the indicator, the stochastic zigzag lines are both below 0, below 20. That's when we buy it. The other one is this, and this is a place to buy from. I would not have sold this because we are in an uptrend and the price showing overbought. Sorry. So you can't pick a buy here. You can't pick a sell. 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 So already you should be seeing something that whenever the price is in an uptrend, as it is now, you cannot just be looking for sell positions. You're looking at two indicators, the zigzag. You're confirming that. So this is a good place. We also have another one here because this is now a downtrend. This is a downtrend. We have that. So here we had several opportunities for sell positions. Like we had this was a sell. We had this was a sell. We had this was a sell. We had this one, this was a sell. And then we had this as a sell. So you can technically see that we actually were having very, very good places to look for a trade. If we were not looking at these two indicators, we could have entered in a lot of places unnecessarily. So something else, this strategy is good for scalping. That is, you don't want to keep holding on to trades unnecessarily. Does that make sense? You don't want to keep holding trades unnecessarily. And something else, if you decide to hold trades with this strategy, that is, assuming you took a buy here and you took another buy, this buy is still on, this buy is still on, this is still on, this is still on, and you keep holding onto that buy. When the price breaks above this line, you're supposed to step out of all those trades. That is, that it means that the downtrend which you had here is ended. So we do not want to keep holding on to such a position anymore, especially all those trades, because if you hold on to them, hoping that the price may likely go down, it could come up and remove all the positions you had already open in profit. So simply put, that even with the indicator that we've looked at, it still works very, very good. So you don't ignore the 5 minutes, you don't ignore the two indicators, you don't use just one indicator. When you know the trend, look for oversold and overbought areas. So thank you very much. That should bring us to the end of this analysis. We're going to meet again tomorrow at the same time, on Wednesday next week at the same time. Thank you and see you.